Good morning. I hope you're doing well and welcome to today's edition of the London Session Open, or 600 Seconds of Trading as we call it here at TradeCaptain.com. My name is Alejandro Zambrano, Chief Market Analyst with TradeCaptain, and it's Chief Editor. We're going to take a look at the markets as we usually do at this time of the day, but before starting I want to say hello to Hi. Thank you so much for joining us this morning. And if you are watching this, feel free to just say hello or ask any questions using the chat box to the right, exactly like Hi has done this morning. Now we're going to take a look at the markets, but before we start, as always, I need to stress that trading financial markets unfortunately is risky, and there's a general risk that we'll lose all of our invested money. And let's begin. So we're going to begin with the dollar index today. So this is the dollar index, and it's a quiet market, if anything. The market is trading sideways between the June low and the July low, and it's actually July high. This is what it is. And as a consequence, many of the other pairs like Euro dollar, Aussie dollar, New Zealand dollar, and also pound dollar are trading sideways, to be honest. There's not much happening in those markets, and we just need to wait for a breakout. We talked about it in the past, but you might remember this is the euro. You know, the euro is trading sideways for a very long time, but when it finally ended its sideways pattern, the market embarked on a very nice trend. So most likely we'll have something similar, and today we have the outcome of the Fed rate meeting. So that could be something that could kickstart the dollar. My preference or my suspicions is that they're going to be slightly more hawkish than anticipated, and that we might have a bullish breakout. So if we take out the July high, I think we could rally maybe to 97.87. That will cause pound dollar, euro dollar to trade to the downside, and dollar yen to most likely trade higher. The alternative is that they don't say too much and we try to spike below the July low, and if we take out the July low, the market could potentially head a bit lower, maybe down to 93.18, and then we'll see. If we take out the 93.18 level, then I think that's going to be the more, that's when a real new trend would really kick off, and then the market in a few days probably heads to the downside. Until that happens though, I suggest I'm going to lay low and just wait. Here are the levels for the euro, with a break to 117.90 potentially causing this market to rally to 118.51, followed by 119.97. So this is a good little opportunity on a break to the upside. The alternative is that we take out the June low at 115.07. Today as well as we have the bank, no, we don't have the bank, we have manufacturing PMI from the UK. We're gonna take a look at the pound. Now the manufacturing PMI, which is out in about 3 minutes time, does not tend to move the markets too much. So I wouldn't get too excited about it because the UK does not have a large manufacturing sector. Most of the economic growth is centered around services. Now, for a few days ago to some of my clients, I said that selling at 132 is probably a good idea for this to head to the downside. But I also said that it's something that I would not touch because of the overall sort of sideways pattern or the lack of a strong downtrend. But for now, as long as it's below 133.18, then I'm going to maintain a bearish bias. The figure is going to be out in the next few minutes, so might push it down a little bit or up. But again, I would ignore those figures. In fact, I would ignore even the central bank rate meeting from Bank of England coming up. As long as it's below 133, then I'm going to remain bullish. If we take a look at Bitcoin, it had a strong decline, unfortunately. So obviously, if you bought here, you will be in trouble now. And the market is testing support here. But as long as it's trade above 72.02, the market should hopefully come back and be able to bottom out. However, though, I wouldn't get too excited. My colleagues here at TradeCaptain did publish, I think it was an Ethereum setup. This is a outlook by Nathan, and this is Ethereum. And Ethereum, as you can see, this is the daily chart. is challenging $404 per coin. And if it trades, in fact, you could also just link this low and this low with a trend line, and this would have been a sort of bear flag. And looking at it as well, it looks like a head and shoulders. So Ethereum is very close to taking out support, and that will be bad for the Bitcoin and crypto markets in general, because it's the second biggest current coin. As well with Ripple, last time I checked, it was trading very close to support. Yes, thankfully though for I guess Ripple buyers or holders, you didn't get that little push. It could have easily been that the market would have traded below 42.4 cents a coin, and that would just initiate further weakness here in the actual in Ripple. So need to be very careful. Crypto markets are not too healthy right now. Let's move on here, and we'll take a look at gold. This is gold, bit sluggish as well. It's never good when the market starts to turn sluggish like this, when you're trading short term or tracking the trend from the short term as we are. As you know, I've been bearish since the price traded below 1309, and then I was bearish on the way down, and here I think I turned neutral, but when we took out this level, the market continued to go down, and since then we've just been moving the stop loss, not necessarily exactly like this, but we're moving it lower and lower and lower and lower. So the last level that traders are focusing on is the 1236 level. The market is bearish below that level, and maybe today with the Fed, we'll hopefully continue to trade to the downside. But if the Fed fails to impress traders, it might spike up and get everybody stopped out. Here is West Texas. So it wasn't anything I was trading myself, and it's a bit sluggish. And unfortunately, the market, as you can see, it took out the highs and moved all the way up, but then it tumbled yesterday, and it actually traded below my trend defining level. If this was a genuine bullish uptrend, then you know, on that pullback, people would have bought it around 69.38 or 69.40 or something like that, and then lifted. But instead, it tumbled. Now, there's no reason here to assume that this is going to trade much lower. I think what's happening here is that we're probably just going to trade sideways for a bit longer, and I think maybe we'll converge in an even narrower range, and then potentially try to do the same thing, which is again to be bullish or bearish. And in general, unfortunately, the way the state is, it's summertime in Europe and North America, and no, the Northern Hemisphere in general is summertime. And because of that, just far less liquidity, far less people trading. And, you know, trend trading, which is what I do, is very difficult at this time. So, especially now when we're in August, you should reduce positions or be very, very careful and just trade high quality setups. If not, it's very likely that you're gonna lose a little bit of money here, make a little bit of money on another position, but most of the time it's gonna be frustration because you bought a position and it's fluctuating from a little bit of profit to a little bit of loss, a little bit of profit, a little bit of loss, and then maybe spikes below your stop level, and then 2 days later it's back up again. And that's just part of a range-bound market. Here's the DAX. The DAX is bullish, but I don't think people will be buying up here unless we have a break to this high. Take out this level, we might get that little push, but the market is stuck in this volatility, wider volatility, and sometimes the market change. It's the way it operates, and it just starts to trade higher like that, especially when you're in a strong bull market. The corrections are that low, very shallow. I'm not sure, and I don't think we have ended that yet. So I think if people that want to buy, they're clearly not buying up here. They will potentially buy down here, or maybe at the 61.8% correction level at 12,626. Okay, and then work with a long position. All right, let's see if we have any questions, and let's take a look at this as well. So take a look at the calendar. So the UK manufacturing figures were out. They printed 54 versus a consensus estimate of 54.2, and this outcome was also slightly lower than the prior reading of 54.4. So slightly softer numbers from the UK, nothing to necessarily worry about too much. In the case of the pound dollar, it's literally unchanged, a little bit higher on the news, but this deviation here is not really important enough for us to trade. This will probably continue to remain sideways for longer. Okay, let's see if we have any questions. Good morning, Antonio. I hope you're doing well, and thanks so much for joining. Hi says, Euro Turkish Lira is trying to break the upside, but it's difficult to calculate a profit target. So let's take a look at Euro Turkish Lira. Yeah, so this is the Euro Turkish Lira, and it's a daily chart, and one thing I can see right now, I'm not sure if we'll reach a target, but it would be sometimes you need to sort of ignore. I'm ignoring most of this. As long as you don't exaggerate, you can sometimes get away with things like this. So this would be ascending triangle, and you can take the base, and that gives you a target of 588. You can also just take something like this section here, which is the midpoint, and that gives you a target of 854. I'm not sure what this is, if this is anything. I don't think this is anything. But if we work with this target here, then we had the breakout on July 9th, went all the way up, all the way down, but we never traded below. We never really moved below, for example, below this candle here. So we never really ventured deeply into the pattern. So that is, this pattern acts active. It still can go to maybe 5.8, E8. Some people are gonna look at like monthly and weekly charts and they try to find something similar. However, I'm not sure we're gonna find anything here. You can as well just look at the dollar Turkish lira. So this is dollar Turkish lira, so it's pretty much the same sort of target. Here you can treat this either as a rectangle as we discussed, but probably better to do it like this. The target is very similar anyway. So dollar Turkish lira, I should be able to reach to maybe 508, 510, and let's just do 510. You can try to take this and sort of figure out if euro dollar is staying at a current level and the Turkish lira is at 510, then what's the price gonna be in euro Turkish lira? I suspect it's gonna be very similar to this target we just shared with you, which is I think it was 588. Okay, we don't have any more questions, so we're gonna wrap things up. I want to thank you so much for joining me. Tomorrow I'll make sure to be in early, on time. I mean, fortunately I caught up in a few meetings this morning, and that's why things got delayed. But I'll be back tomorrow as usual at about 9 o'clock. Have a good day, and don't forget to like the video and to retweet. And if you have any questions as well, then don't forget to reach out to me. You can easily just ping me via AlexFX00. There's even a WhatsApp number here, and you can also send me emails at asambrano@tradecapital.com. As well, before I forget, I did a little update yesterday, and looks right now that we have potentially 3 winners of $100,000. Initially, it looks to me that it was just people trading on EAs that were going to be able to reach 100 trades, but it's manual traders now. It's relatively straightforward. If you have a profit factor of 1.5, so in other words, you make money. 2, if your average percentage winning is higher than 45% or at 45%, which means that if you trade 100 times, 45 are winners and the rest are losers, then you qualify on that condition. And then the third condition is having a average profit to average loss of 1.5. So if you have an average pip win of 50 or 75, then your average loss should be about 50. Or if you trade, if you have an average profits of 30, then your average loss should be 20 pip. It's about the ratios. If you do that in your within a quarter, in essence, manage to make it up into the top 10, then you would potentially be managing $100,000, which is something you can trade. And then if you make money on those $100,000, then you could potentially make 20,000, or not 20,000, 20% of any profits. So if you have 100,000 and after a year you make a 20% return or a 50% return, so you make a 50. So out of 50,000, 20% of that is 10,000. So that's something that is available to anybody really. The only thing you need to do is to fund an account with a minimum of $1,000 with a mana capital or 1,000 euros, and then in essence just trade. And it's an MT4 platform, so there's no difference to any else. And you even have cryptos here, which makes life much easier, because if you get on board on a crypto trade, you will have a very good risk-reward ratio if you get it right. So it's a normal trading account, MT4, MT5, and as long as you sign up and trade, then you could potentially get those 100,000, which is also a very, very nice start. It's very different. Imagine you trade well, and you go to somebody and says, oh, you know what, I manage money. And then they're going to ask you, so how much do you trade with? And you say, well, I trade with $500 or $1,000. Then a rich person that you would like to manage money, they wouldn't necessarily give you too much money. I mean, why would they give you 100,000 to manage if you only have, you know, a few thousand? But if you say, look, I work with this hedge fund and they are managing 100,000 of them, and last year I did 30%, and my drawdown was 10. Then suddenly people say, oh, did you? And then suddenly they say, okay, so how do I get involved? And you get yourself, I don't know, 100,000 again, or maybe 200,000, maybe 500,000, depending on how rich your friends are. And suddenly you're managing more money. And then when you go to the really top guys, you say, okay, so how much are you managing? Well, over the last year or two, I've been managing 500,000 or 1 million. And then they're going to say, okay, that's interesting. Well, you know what? We're going to give you another 1 million to work with. And then it moves so and so on. When you're managing 10, 20, 30 million, they give you even more. So it's a good little start if you're good at trading, and the only problem you have is that you don't have enough money, because that is many times the number one problem. For example, right now, because of the new ESMA rules in the European Union, people are looking for brokers with high leverage. But guys, that is not the problem, or that is not what you need. High leverage kills, the same way as people die in traffic because they drive too fast. My effective leverage across my positions is starts out with about 2 times leverage. So for example, if I have $100 on my account, I will open positions with maybe $200. That's the total value of the positions. And then if it goes good, I will buy more and more and more. And eventually maybe I have 4 positions on, maybe 5, and my effective leverage is going to be maybe 10, sometimes 13 times. So with that, this year I have a return of about 32% so far. Last year was even more, about 124, but it was mostly because of cryptos. Key point here is that you don't need that leverage, but because people have small accounts, they think, oh, I need a lot of leverage to make it worthwhile. And as well, of course, if you're scalping, if you're looking for 10 pip here, 20 pip there, then you need that leverage. But most people don't need the leverage, and the high leverage is probably the number one reason why people lose money. If you look on advertisements from big brokers now, they say, like 79% of clients lose money, 82% of people will lose money. It's because these 282 people or 79 that trade is because they trade with high leverage. If you look at places like Hong Kong or places like the US where people trade with less leverage, then about 60% of traders, I think 40% of traders are winners and 60 are losers. Whereas if you look in Europe and in some places where you can have even more higher leverage, is closer to just 20% being profitable, 80 being losers. And it's because of the leverage. And this sorts that out. Because you don't, with 100,000, again, 100,000, and you make a 50% return on a year, you keep 10 of those. So, actually, sorry. Yeah, you keep 10,000. Something to think about. Visit amanacapital.com/delta for more info on this. As well, if you have questions to me about that, so about this, then just ping me. Again, you have my Twitter, and you can always just send me an email at asambrano@tradecaptain.com. Have a good day, guys, and I'll see you guys tomorrow. Thank you.